I have a love and hate relationship with Novo Nordisk. The stock is currently at $55 with 50 cents. And if you take into consideration that in the 1 year chart, it is down about 53.39% in the past year. If you didn't know, Novo Nordisk is a Danish pharmaceutical company and they make weight loss drugs like Ozempic. Now, as you saw, the company is down about 50% year to date. And if we take a look at the average price compared to what the stock should be worth, you can see that it's expected now to be undervalued about a 33%. Keep in mind that the numbers you're seeing here is in Danish dollars, so it's not US. That's why you see a bigger number than the 55 price that you just saw on the previous screen. But as you can see, this gray line here should be the average what the company is worth. And as you can see, this is where we are down here, so currently estimated to be about 30 to 25% undervalued. And one of the reasons for that is, I mean, if you take a look at the EPS compared to the current price, if you saw the previous video I did on Novo Nordisk, I like buying companies like this, that the EPS are constantly increasing because usually the price follows the EPS, but not in this case. Take a look at this here. EPS are currently increasing, but since January 2025, EPS have been increasing, yes, but the price has been going down. So there's something here that's not correlating as it should be, as in previous years when EPS increased and so did the price. So this is already, as I explained before, something that's caught my eye, and it's definitely something worth taking a look into the company. So you might think it's something due to debt or their profit or something like that. However, that's not the case. If we take a look at the revenue compared to the total debt compared to what the company could be worth, so the PE ratio, how many times you're going to be paying for this company, as you can see, revenue has been increasing drastically while the PE ratio has been dropping drastically. Yes, the debt has increased a significant amount since 2024, but I'm going to tell you why that is now. The key reasons is because new site acquisitions, they obviously have higher capital expenditures. Again, their free cash flow drop. This is because of the acquisition, therefore the debt is going to increase as well. A lot of increased interest expenses, as you can see now, especially with the US, they have a lot of customers in the US. Everything's a lot more expensive here. I live in the US, so you could definitely see it on a day-to-day consumer basis. So it's going to be the same for the companies that are importing into this country. And then obviously maintaining or expanding their supply chain infrastructure, and this is going to be to support the high demand for drugs like Ozempic and Wegovy, like I mentioned. So if there's a higher demand for it, they're going to have to invest a lot more to make more drugs to then be able to sell more, but in the end it's going to turn into revenue and into profits and to EPS. Now, however, I mean, if you take a look at this company financials, this is just beautiful. I mean, revenue up 25%, operating income 33%, net income 21%. The only thing that's really decreasing again is the cash flow, but it's not decreasing because they're losing sales or anything like that. Is decreasing because they're reinvesting back in the business. Therefore, in the future, they're going to have a lot more free cash flow once again. Now, this is something very important to me. A company should have more assets than liabilities. Of course, that depends on the sector that they're in. Usually in the energy sector is not the case, but for this type of sector like pharmaceuticals, it should be. And that's the case for Novo Nordisk. 882 billion for assets, only 314 for liabilities. That's a check mark there. Keep in mind, guys, we're also going to be taking a look at the intrinsic value to see how much this company should be worth. But again, let's take a look at the free cash flow margin. It's about 20%, which I mean, I think is beautiful. Just look at this healthy growth chart. And if we take a look at the rest of the metrics, gross margin 84% is absolutely beautiful. Usually you want a gross margin of over 40%. That means the company has moat. They have a high competitive advantage. Their net margin 35%. Oh my god. Usually I go for companies that have about 20%. And then return on capital employed, usually you want this around 10, 15, 20%. Depends again on the sector and stuff like that. But I mean, this is at 31%, which is absolutely beautiful. Now, something that I absolutely love about this company is their dividend yield, which is currently at 3.38%. So this company seems to be like a good company. Again, this is not financial advice, this is my own opinion, but it seems to be a good company. It seems to be a company that's going to have growth in the future. And not only that, you're buying it at a great price, or what I consider to be a great price, and they're also going to pay you a dividend in the meantime, which is absolutely amazing. Now, if we just check that dividend real quick to see how safe it is, for example, they have a dividend growth of 6 years. They probably cut their dividend before in the future. They have a 5-year growth rate of 21.57%, which is absolutely crazy, and they have only a payout ratio of 49.91%. Let's just say 50%. You usually want to go for a payout ratio below 70 to 80% if you're investing in the stock solely for dividends, but that's going to be another metric that you're going to have to look at, and another intrinsic value that you're going to have to see if you're just investing for the dividend. But in this case, it has a payout ratio of only 49%, so you don't even have to worry about that. Again, the dividend yield is going to be 3.11%, 3.33, which is going to be an annual payout of an annual payout of about $1.73. Now, as you can see, they have a share buyback program of 11.65 Danish dollars, which that's going to turn into about 3 billion US dollars. And so far, as of January 2025, they had repurchased a total of 23 million shares. So this company, again, the numbers are looking juicy. You're getting a good dividend yield. They have a buyback program. That means the management believes in the company. They believe they're going to overturn this, so they're buying back their own shares to then make more profit in the future. And then also, if we take a look at the competition, I mean, a lot of the pharmaceutical companies are going through a tough time right now. As you can see, the price change in a lot of them is pretty much in the negative, but hopefully in the future, this is going to be a good turnout. And as well, as we take a look at the competition, Novo Nordisk is going to be one of the ones that's going to be considered undervalued at a higher margin or at a higher percentage. For example, 33% undervalued. And then we have a few at 37, at 4, 23, 72, etc., etc. And now what you've all been waiting for, let's go ahead and take a look at the intrinsic value. So I'm going to show you guys this in dollars in a second, but the base case is going to be worth about 512 Danish dollars. The worst case is still undervalued at 13%. It's going to be about 394 Danish dollars. And then the best case is going to be about 826 Danish dollars. So for the base case is going to be about $80 per share. For the worst case is going to be about $61 per share. You're going to be making a profit of about $5 to $6 per share if you were to buy it right now in this instance. That's not what I'm telling you to do. It's just what it would be worth. And then in the best case scenario, the stock will be worth about $129, which you'll be pretty much doubling your investment. Full disclosure, I did sell some puts in this company at about, I think it was like a $45 or $50 strike price. So if I do get hit at that strike price and then at the expiration date, I will get assigned 100 shares, which I don't mind owning at that price. So let's just see what happens. If you enjoyed the video, please consider leaving a like. Don't forget to subscribe. And as always, I'll see you on the next video.